If you are planning to buy your first home in Scotland, there is support out there for you from the government. They can step in and assist you with things like your deposit or allow you to buy a property that you couldn't otherwise afford. Schemes like the Lifetime ISA, but don't forget about the Lift scheme. So the Lift scheme is there to help you buy your first home, and it's available in a number of scenarios. So today I'm going to talk you through what the Lift scheme is and how you can benefit from it and use it. The first thing that I'm going to touch on is what is a mortgage and how a mortgage actually works. So a mortgage is a loan secured against a property. When you go to buy a house, typically you're going to need to borrow money to buy it, because not everyone's got the money sitting there to just go out and buy it with cash. And you're going to need to put down some form of deposit usually, and you're going to need to make sure that the mortgage is affordable. And where the Lift scheme can help is it can provide deposit support and affordability support. And in today's video, I'll talk you through them. So what is the Lift scheme, or the open market shared equity scheme up here in Scotland? So this is a scheme where you can receive up to 40% funding towards the price of your home. The Lift scheme's helped over 13,000 people since 2005 do that. Doesn't cost anything to apply, and once you apply, there's no obligation to buy a property from it as well. It is available to first-time buyers, so if you're planning to buy your first home and you're struggling to get the deposit or you're struggling to afford it, the Lift scheme can help. It's also available to social renters, people with disabilities, members of the armed forces as well. If you're a veteran as well, you can use the Lift scheme if you've left in the last 2 years, or if you're a widower, if anyone been in the armed forces, you can do the same for anyone who has passed away in the last 2 years, and also for people over 60 years old. But how does it work? So this is where it's your typical shared equity scheme. So the government will contribute between 10 and 40% of the value or the purchase price, whichever is lower, and the government takes the same percentage price when the property is sold. So your minimum contribution will be confirmed when you apply, but essentially if you buy a house for 100,000 and the government gives you 40% towards that, initially their stake is £40,000, 40%. If you then sell that house for £200,000, 10, 20, 30 years later, the government gets double their money back. So they're going to be getting £80,000 back. Bearing in mind that you're getting an uplift as well, so you're getting 120 back from it. But yeah, that's essentially how it works. So that property that you bought for 100, your share in that property then becomes 120,000 as opposed to 60,000, and the government gets their stake back as well. So that's essentially how it works. There are some valuation thresholds that you need to be aware of and understand. On the Link Housing website, who administer the fund, they've got different thresholds on there, and they've got a little tool which is quite handy to tell you exactly what the threshold will be in your area. And to give you an example of the thresholds, it works depending on the size of the property, so how many bedrooms are in the property and what location it's in. So let's say, for example, you're in Aberdeen and you've got a 3-bedroom with 1 living area. The maximum house that you can get, or the maximum value, would be 125,000. You take that same property in Edinburgh and it's £200,000. So it just varies depending on the type of the size of property and the location. Take South Lanarkshire where I am, and it's a maximum of £90,000 for that same house. So make sure that you take those thresholds into consideration, and if it is something that you're looking to find out more about, seek advice from a broker or pop onto the Link Housing website to find out more about it. Now, Kevin, a client from the Lift scheme, used it, and here's what he says. He says, and I'll read this verbatim, he says, the Lift helped us buy our first home. Our council rent was £416 a month. The mortgage was £230 a month. So we're now able to pay the mortgage off, repay the government money, and own our own home. So even paying less than what's available to them and paying rent to the council. So that was Kevin, who used the Lift scheme. But I hope you found this video useful. If you do have any questions on it, feel free to fire them in the comments and I will get back to you. As always, don't forget to like and subscribe. Cheers.